that I can't shelter a lot of my wealth in the same way that the average person can, because I'm not, as a U.S. citizen living in Canada, I cannot invest in the equivalent of a Roth IRA.
What's been your biggest frustration as it pertains to capital gains tax and or deferral when you go to want to exit at a high spot?
Well, candidly, I'm in a unique situation because I am actually a dual citizen of both countries now. And I can tell you that one of the most frustrating things about being an expat is the US government's the only government in the world that taxes you based on your global income. And so, really, I'm in a position because of that, that I can't shelter a lot of my wealth in the same way that the average person can, because I'm not, as a U.S. citizen living in Canada, I cannot invest in the equivalent of a Roth IRA in Canada because of the way that the U.S. government looks at that as a foreign trust. So I'm limited to that. And at the end of the day, if I'm in a situation where I can limit my tax exposure in Canada, I then have to pay the United States government. So I pay an exceptional amount of tax. Do I think it's fair? Not necessarily so. But at the end of the day, I do realize that that's part of life. So in terms of my own bone to pick is paying the highest prevailing tax rate and then become a Canadian citizen if I decide to move. Now I get an exit tax, right? Which is, trust me, you get an exit tax as a U.S. citizen as well. I just in a different financial position because I immigrated to Canada when I was 26 or 27 or so, and now I'm 37, so I'm in a different financial situation. So again, I think being an expat is very obviously great being an American, but I think treating all Americans as tax mules when you leave the country, not necessarily to evade taxes, but to just change your life. I don't necessarily agree with, candidly. And now, if you look to renounce a U.S. citizen, they'll chase you for 7 years after, just as a kind of a foresight. You continue to file after 7 years, and you pay the exit tax. So that's just been my own situation, and I know my situation is very unique.
Yeah, no, thanks for sharing that. I appreciate that. That's kind of it's good to know about. The other one that's kind of interesting too is foreign nationals who are investing in U.S. investments and are subject to capital gains tax and or build up their wealth inside of the U.S. It's only a $60,000 exclusion on the death tax, which is really fascinating. If you're married and you're an American citizen, it's 22 million married right now, 12 million single. But anything above and beyond that gets hit with a 40% death tax. That's nothing to do with a stepped-up basis. And if you're a foreign national, it's even worse. You only have $60,000. So let's just imagine you're a foreign national, and you invested in the United States for 50 years, and you built your net worth up to $100 million inside of the U.S. And if it's inside the taxable estate, your exclusion as a not a U.S. citizen is going to be $60,000, which means $40 million. The day you die after 6 months is owed to the U.S. You're like, wait, what? Whereas if you can get it outside your taxable estate and or do some estate tax planning, right? You can defer that or even potentially eliminate some of that with proper planning. And that's part of what we're here to help people do. If anyone's interested in how to do that, you can go to capitalgainstaxsolutions.com, and we can talk about the Deferred Sales Trust and how we're able to do that.